Hello, everybody. This is Professor Hassey. It's Business 635 online. This is my week number 7 update video. The date is Tuesday, November 5th, Election Day 2019. My subject of my video this week is a little earlier than it's scheduled in the week because I'm going to be traveling this Wednesday through Saturday, so I wanted to get the video posted for you, serving a couple of purposes. Number one, just to give a brief review of assignment of case number 2, which I posted last week, which everybody did very well on. Just a brief review of that. Then to talk about the Electrics Incorporated case, which we're going to be talking about every week for the remaining time of our term until it's due, and also give a brief description of the student discussions groups that I have posted this week that I would like all of you to participate in. So first of all, case number 2, which was posted in Blackboard this weekend, it was a case designed for you to put together a PowerPoint presentation of a variety of topics. I posted my interpretation PowerPoint so you can compare your work to that one, but everybody did very well. My interpretation PowerPoint was a little bit more detailed than what a lot of you needed to do, but I wanted to give you all the different angles to what type of presentation would be adequate for that type of work. Also, I posted in your grade center a spreadsheet giving you the detail of how I graded your work. But all in all, it was a great performance. I was especially pleased with how you handled the capital call or the description of a IPO by a variety of different companies. Beyond Meat seemed to be the most popular company that we chose. But you all did great, and I wanted to thank you for that. Now next, I want to talk about our electrics case. The electrics case is posted in your Blackboard under case study. And this is a case designed over a multi-week period, individual work, to put together a description for a company. The name of the company is the Electrics Incorporated. And the Electrics Incorporated is looking to make a product that can convert cars to electric cars, electricity. Probably a pretty good idea in today's economy and today's world. And this car is a kit. This product is a kit. And the determining factor in the kit is two controllers. And your job in this problem is to do a capital analysis of the two controller products. In other words, a spreadsheet for one product, one controller, and a spreadsheet for the other. The bottom line will be which, in your terms, would prove a better investment, a better return on the investment for this company. In addition to that analysis, you're also going to be doing a scenario analysis of different levels of types of output in units and in prices. And also you'll be doing a sensitivity analysis, taking two variables and comparing them in various percentage deviations of how they would affect the bottom line or the NPV of the company. Kind of complicated, kind of involved. I understand that. That's why every week we'll be having discussions. We'll be having videos like this one to help you along the line. This week we're just concentrating on the basic fundamentals of the case, which hopefully all of you have read, and begin to isolate the problems. And the case centers around a paper that's going to have to do with on page 4. Answer these 9 questions. So your APA format paper will answer these 9 questions. Now the paper format can answer the questions 1, 2, 3, 4, and so on, or you can incorporate the answers into how you write the paper to explain your conclusion about which company or which product you recommend. A couple things to note in yours. First of all, there's a non-financial analysis. How much importance should be given to the energy cost situation? This company is located in Southern California. Why is it important for this company to market and hopefully produce an electric car kit? You should answer that question in terms of, is this a viable investment in Southern California? Another key area is the depreciation schedule, MACRS, Marginal Accelerated Cost Recovery. In your textbook, there is a definition of this depreciation schedule for the life of 8 years, which is the life of the 8 years of this project. Also, you can get this depreciation schedule by going to the IRS and asking for that depreciation schedule. So the depreciation schedule is a little bit different than straight line, and you should be aware of that. Note, there is no salvage value in this case. No salvage value. You're going to use the average demand scenario, and you're going to determine, with respect to sales price, what is the sensitivity of two key variables. The variables are the selling price of the electric motor and the cost of the controller. You'll be doing a sensitivity analysis, but we'll spend a little bit more time on that next week. So this project is to determine whether you will reject or accept the project, and these questions will be answered in your paper, plus with a spreadsheet analysis. Now let me take a look at the data. You are going to be doing basically 4 tabs for each product. So 8 spreadsheets. All right? 4 tabs, 8 spreadsheets for the 2 products. Each project, here's one product, the CTX13 model, and the other product is the MT78 model. So you're going to be doing 1, 2, 3 spreadsheets for that, plus another spreadsheet for your scenario and sensitivity charts and conclusions. So 4 for each controller will be the spreadsheet backup to your work. These, naturally, you have different rates. These are per unit, and the per unit labor costs and parts are the same no matter what the demand level is. They stay the same. Selling and general administrative is a fixed cost. That's $9.5 million. You have also controller costs. These are variable costs, $12.80 for this controller, $12.60 for this controller. So these prices or costs stay consistent no matter what the controller is. Here's the differing factor between the 2 products. You lump all these together to determine an NPV. Here's the rub. First of all, you have a warranty cost. $75 a year for 5-year warranty for the electric motor, and then for this product another $90 a year for 5 years for the controller. That's $165 a year for 5 years. That's $175 a year for 5 years. Now what does that mean? It means when you produce a product in year 1, it has a 5-year warranty. When you produce a product in year 2, it has a 5-year warranty. When you produce a product in year 3, it has a 5-year warranty. Now, how do you incorporate those 5 years of warranty costs into the year that you're producing and selling that product? Like $4,250 for labor and $2,500 per unit for parts. You have to use a net present value analysis. Note, the present value of this cost we used as a cost figure for each electric motor. So you have to determine the present value of 5 years of warranty costs into one number. That will be your per unit cost for warranty, and naturally you'll multiply it by the number of units you're producing and selling for that particular year. Okay? That requires a little bit of thinking, a little bit of a challenge, and we'll talk more about that also in later sections. And then finally, the investment, $17 million. The weighted average cost of capital, 10%. The inflation rate is 3%. And then the financing. You have to determine the WACC, the weighted average cost of capital. Debt to equity ratio is 50%. Note, debt to equity ratio is 50%. The cost of debt is at the high A range. The company's tax rate is 35%. The current yield on the Treasury notes, or the risk-free rate, is 3%. The forecast of the market premium is 3.5%. And the company's overall beta is 1.35. So that's the analysis you need to do. Note, I go back to the questions. Note question 2. What is the project's cost of equity? You'll be using the capital asset pricing model. But note, why did Professor Hasse give you all these other details about their competitors? Why are these other details? Because what I would like you to do is determine the unlevered beta for this company. The unlevered beta for this company. In other words, take out debt as a part of the analysis for this 1.35. You're going to have to look that up in your textbook. But what is the company's beta unlevered? That's the beta you're going to use in this capital asset pricing model for the cost of equity, separating out debt. Need to think about that one and do a little research on it. That should be one of your first tasks this week, is to get the cost of capital, weighted average cost of capital, out of the way, because you're going to need that for other parts of your analysis. The last document in this electrics case you need to be aware of is the rubric, because there's additional information in the rubric that you need to know to complete your work. More specifically, where it talks about sensitivity deviations or percentages. Your percentages of deviation for your sensitivity analysis are +1, +2, +3, -1, -2, and -3% for those two variables. Note that in your sensitivity analysis, and again, we'll talk about that next week. So make sure you read this rubric. So as you can see, there's a lot of data involved, and we begin our discussions of this data and how to go about it with the 3 discussion groups this week that I separated you into groups. Each group is to take a topic of one of the 3 articles that we had in week 6 and talk about it. I'm looking for student input, because these topics of these 3 articles can be used in the analysis of this electrics case. It can also be used in the analysis of case number 3 and case number 4. So I'd like you all to discuss this case, have most of your postings and feedback to your individual colleagues in those forums done by Saturday, so I can give you a response if I would like some additional information from some of the commentary, and have everything done by Sunday. We're going to be doing 2 of these in the next few weeks. Next week we're going to have case number 3 to work on, but the week after that we're going to be doing another discussion post similar to this, where I'm going to be breaking you up into groups to talk about a topic that's going to be prudent to the discussion of that week's case. So the discussion forums are some interaction between you students, where last week we had an interaction with me individually on WebEx. Now you're going to be having a discussion forum with interactions and inputs about the topics of the 3 articles. Please take these seriously. Please participate early and often. This is graded work, and it will help you in your grade for this course on how you participate in these topics. If there's any problem or issues with this, please let me know. Remember, in your answers and your responses to your fellow students, be professional, be courteous, be ethical. No bad language, no disrespect. Treat everybody the same and respect your opinions and your feedback. Okay, so remember that. That'd be great. The last topic this week is I want to bring up this issue. We're going to be talking about leasing. All right, let me hang on with that. This is taken from week number 7 at the very bottom of the review problems and solutions. This is an example of a lease exercise. And I want you to take a look at it this week. We're going to talk specifically more about this next week as it applies to leasing, IPOs, mergers and acquisitions. But I want you to see, this is a spreadsheet discounted cash flow analysis of whether we should purchase or lease an asset. And I want you to study it. See how we use depreciation. See how we use loan payments. See how we use tax shields. Take a look at this, and we'll be discussing this more specifically in week number 8. So thank you, everybody. That's a brief intro to what you have to do this week. Begin to study and begin to piece together the Electrics Incorporated. Again, this is a tough case to figure out. You're going to have to spend some time on it, some interaction, some questioning. You can even question and ask questions of your fellow students. You can ask questions of me. So start the work now. You're going to need the full 3-4 weeks to do this. Trust me. All right, everybody. Thanks a lot. I appreciate your looking at this. We hopefully will talk to you again next week. Any questions, let me know. Thanks, everybody. Have a great week. Bye-bye.